All righty. Good morning, everyone. Thank you so much for joining us for this MECA meeting where we will be, or our friends at Risk Management will be reviewing certificates of insurance. This meeting is being recorded and it will be sent out afterwards in case you want to share it with your team. Just a few MECA announcements. We will be sending out a survey sometime in the next couple of weeks regarding topics that you guys want to see for the next couple of MECA meetings and see what else we can offer as a group to you all. So be on the lookout for that. And I know this is a very interesting topic that we need to review after the new food policies and guidelines that came out over the summer. So without further ado, I'm going to pass it over to Jackie.
Hi, good morning. Glad everybody could be here. I'm not sure that it's an exciting topic, as Marissa had suggested, and maybe you didn't wake up this morning thinking, yay, we're gonna learn about certificates of insurance today. But hopefully it will be helpful information for you. And I'll just start off and I noticed that Suzette Allen from our team is also on the call. So Suzette, welcome. And please chime in if there's something that you want to add to the presentation. I do want to keep it make it as interactive as possible. I don't know that insurance is the most exciting topic for everybody, but we do, it is important, and we'll talk about why that's important and how it impacts your events. Our objectives today is we're going to just talk about the role of insurance. We'll talk about what the insurance requirements are when we're having people do business with ASU. Since it is the department and the coordinator's responsibilities to validate the insurance, we'll talk about collecting and reviewing COIs to make sure requirements are met. And then we'll talk about how we can help you. And I noted there at the bottom, as time permits, and I will probably just interject where it makes sense, we'll also talk a little bit about when ASU can and cannot provide insurance to others, because I know with event planning, most often we're talking about those things that are on campus, but there are things that are off campus where we're using somebody else's space and they might require us to have insurance. So we'll talk a little bit about that too. But please, I can't monitor the chat or the Q&A while I'm presenting, but if you have questions, please come off mute, ask a question, or put it in the Q&A and Marissa can help me monitor that. But certainly let me know if there's any specific examples that you want to talk about or any specific challenges that you have once we go through the information. So let's start with the role of insurance. And if we think about it, whether we're thinking about things that happen at ASU or things that could happen in our personal life, and we think about things that cause harm, such as accidents, personal injury, fires, just simple slips and falls, foodborne illnesses. We'll talk about that a little bit since we have had changes to our food and catering policies recently. But when we think about those, again, whether it's in the personal context or the organizational context, we need to think about how we alleviate some of those risks and how we address things that actually happen. And insurance plays a role in that, right? So we could experience loss in all of these things or any of these things, whether it's caused by us or caused by others. But insurance is something that we typically buy in our personal lives, and we certainly rely on at ASU to protect the interests and assets of our organization. So think about how that might help as you're planning events. ASU is insured, of course. We are insured by the state of Arizona. We refer to the Arizona State Department of Risk Management simply as state risk, and they are our insurer. So while I might have my car insurance with Progressive and my homeowner's insurance with Progressive, state risk is the insurance provider for the state of Arizona, including the universities. So they provide general liability coverage, they provide professional liability coverage, workers' compensation, and we rely on that insurance on a regular basis. If we have claims here at the on campus that are related to damages that we've incurred, whether it be property damage, due to infrastructure issues or perhaps weather. But when we talk about insurance and procurement or vendor related things, we don't really want to rely on our insurance. If we are the service provider, if we're the supplier and we're providing services, then certainly we can rely on ASU's insurance and the support of state risk. If we're using someone else's property, so in the example of you planning an event at a hotel or a conference center, and that venue expects ASU to provide evidence of insurance, we can do that. There are some stipulations, and we'll talk a little bit about those later, but we can rely on insurance for that. And if we don't have insurance from suppliers, vendors, whatever you want to call them, then that shifts the risk to us. And then we have to rely on our insurance. And just as you know, in our own personal experiences, the more we use our insurance, the more we pay for our insurance. It works a little differently in state government, but we don't want to be consistently filing claims that we had no control over, nor do we want to present claims that we could have shifted to somebody else. And that's kind of what we try to do when we enter into a contract with the vendor, is we want to make sure that they are responsible for what they should be responsible for. So when we are working with companies outside of ASU and we're paying them for any kind of services, whether you're setting up bounce houses, or you're bringing petting zoos to campus, or you're setting up a party or some kind of event at a venue, we want to know that that third party has insurance, and it serves the same purpose as our insurance serves to ASU, and as our personal insurance serves to our personal financial resources. But it shows that the company, however small they are, have considered the benefits of having insurance to cover any kind of financial loss or any kind of claim that might be filed against them. It's just one tool. It doesn't mean that it's going to cover everything, but it does demonstrate that there are some financial resources in the event that there is an issue. And it helps to protect ASU from bearing those costs of damages that are caused by others. And when you're dealing, again, even with a small company, it's in their best interest to have insurance because they need to protect themselves. And they also, in working with us, need to protect us, and as our insurer, the state of Arizona also. So it sounds a little bit, it sounds like a lot when we'll talk about the limits and when we'll talk about the actual requirements, but the goal is always to protect the assets of ASU and be reasonable for the companies that we're working with. And so our standard limits are created with that in mind. So when you're planning an event, there's a few ways you can go about sharing those requirements with vendors so that they know exactly what is expected of them. And probably the easiest and the cleanest way to do that is when you issue an ASU purchase order. And so if you're paying for whatever services it is, whether it's tent setup or it's some kind of event in the Sun Devil Fitness Center or the MU, and you issue a purchase order to pay for those services, the terms and conditions on that purchase order create a contract between us and that vendor. And the terms and conditions include those standard insurance requirements that ASU has established. So there's a long list of insurance requirements in those terms and conditions, but they don't all apply, and it's pretty clear, the language is pretty qualifying as to what applies to what situation. So we'll talk a little bit about the basics in the context of this presentation. When ASU procurement issues an RFP and they have a resulting contract to the awarded vendor, they have insurance requirements in those contracts. And anytime ASU procurement office negotiates a contract, they will have standard insurance requirements in there as well. So if those are avenues you're pursuing in terms of how you're going to interact with the payment process and the contract process with the vendor, then you're going to be covered by using any of those ASU contracts or ASU purchase order. Now, in the event you don't have a contract, say, for example, you're using your P card to pay for services, which is a perfectly fine thing to do with most event-related services, you're not going to have a contract. And there's nothing that conveys those contractual requirements or makes it a contractual requirement for the vendor to have insurance. So in that case, you can simply send them to the website that I've included here. It's the ASU insurance website, and there's a tab there that says insurance required by vendors, and it just goes through what ASU's requirements are. The information is intended to help you as the department or the coordinator that's setting up the event. And it's also to convey the requirements that we have to the vendors. They can take that information to their insurance provider and say, hey, here's what I have to provide to ASU. Please give me a certificate of insurance that meets those requirements. And that's really what should happen. I find a lot of times we're trying to help them get insurance, or we're trying to help them verify that what they have is going to meet our requirements. And it really should be up to the vendor and working with their insurance provider to determine if that is in fact covered by their insurance, and if they can provide that. And if they can't, then they can come back to us and talk to us about that. The other thing that's on the ASU risk management website are some other scenarios where there might be additional insurance required that's outside of the standard requirements. On our purchase order or our RFP contracts, we don't talk about liquor liability and alcohol because ASU can't use ASU funds to pay for that. But in the event you are hosting an event with alcohol, the bartender, whoever is serving, the caterer, whoever is serving the alcohol, must be insured. So that information is on that website as well in terms of the limits. And then if you're planning an event in which ASU is going to be responsible for minors, then there's also information on the additional insurance that's required in those instances. So I encourage you to visit the website and see what all is there, but you can certainly refer vendors there when you don't have a contract, so that they know exactly what it is that ASU requires for the insurance requirements. Okay, so any questions up to this point?
There
I
is
actually have a
nothing.
question. Oh, sorry.
Nope, go ahead. I was just going to say there was nothing in the chat or in Q&A, so go for it.
Oh, thank you. So I just want to make sure that I have a clear understanding. So if I do not, if I have a vendor and I elect to pay that vendor using my P card, I do not need to get a COI from the vendor, correct? Is that what I heard?
No, you still need to get we'll talk about when a COI is needed, and it doesn't matter how you're paying, a COI is needed in specific cases.
Okay.
The thing with the P card is that there's no contract between ASU and the vendor that states those insurance requirements.
Okay, perfect. Okay, awesome. I misunderstood. And you may go into this as you just had stated. So when I'm planning events, is there any time I would not need a COI from a vendor?
Yeah, we'll talk about
Okay,
that. Yeah,
perfect.
Yep,
Thank you.
that's coming up next. Yep.
Thank you
Any
so
other
much.
questions so far? Yeah, the use of a purchase order makes a difference in a lot of cases because you don't have to communicate insurance requirements elsewhere or otherwise, but you do still have to collect the insurance. But the additional benefit of using the purchase order or a negotiated contract that procurement has managed is that the vendor is contractually required to keep that insurance. When we get a certificate of insurance, one of the downsides of that is that's a snapshot of what's in place at the particular time. So we could get it, and then the insurance could be canceled and we might not know it, or the limits could be lowered and we might not know it. But if you have a contract with the vendor, they are required to have that insurance throughout the term of their performance, regardless of whether they've presented a certificate of insurance or not. So that's the advantage of using the PO, but I know that it's not as easy as presenting the P card. So let's talk about collecting a certificate of insurance. You need to collect one for events where vendors are providing services to ASU. So when we're talking about like some examples, and this is not an exhaustive list, but if you think about anything that could bring risk to ASU in terms of vendors setting up their equipment, or the participants in the event interacting with the vendor's equipment, or whatever services the vendor's providing. Certainly if there's any alcohol service, we've talked about that briefly as well. But if they're setting up bounce houses, if they're bringing animals to campus, if they're driving on the campus mall to set up those things, I see the bright event trucks on campus. Those things certainly are things that we would want to know that they have insurance for. On-site food preparation, what's been designated recently as type 2, which includes mobile food trucks and catering and any kind of on-site food being cooked on campus or sliced or temperature controlled, such as caterers do. Those type 2 food providers you need to collect a certificate of insurance. Those type 1, those ready to eat, when we're going to Costco and we're picking things up for lunch, or we're bringing in pizza from the local pizza provider, you're not going to ask those individuals for certificates of insurance. That's not required. If you choose to, you can, but it's certainly not required. Now, the other time you don't have to collect certificates of insurance is when you're working with the vendor who's been approved and been vetted by procurement. Because when procurement issues an RFP, such as for the event providers, the tent providers and such, it is their office that gets the certificate of insurance, validates that the proper requirement, or that all the requirements are met. And then when the contract is renewed, they check again to make sure that the contract, or that the insurance is still in place as it's required by the contract. So when you're using a company that's listed on Sunmart, for example, it is procurement's responsibility to collect and validate those COIs. So you can ask them to see it if you want, but you don't have to collect it and validate it yourself. So the purpose of a certificate of assurance, remember, if we have a contract, the vendor is required to have that insurance while they're performing services for ASU. The certificate of insurance is really the evidence that they do meet those requirements. And when we're talking about a short-term event, we don't want to have the mindset that, well, it's only a couple of hours, what could happen in a couple of hours, right? We want to know before they come on campus, before they get started setting up, before they're doing what they're doing, in the cases, some of the cases that we talked about, that they do have insurance in place. And it doesn't guarantee that that insurance will remain in place. In fact, sometimes vendors will get insurance simply for the event that they're doing for ASU, and it might last a day and it might last 2 days, and then they don't have that insurance afterwards. And then if they come back and they're subject to our requirements again, they might go get short-term increases in their existing insurance, or get some different insurance for that event too. So it doesn't guarantee that the required insurance will remain in place for a long period of time, but it's really the best way that we can evidence that they're meeting those requirements, and that allows us to verify that the coverage does exist. If we have that certificate of insurance in our records and we have a claim against the vendor, it could help us expedite that in a claim. We've talked about how if we have a contract that is a requirement for them to maintain that insurance. But it is important that you, as the event coordinator, whoever, whatever department is responsible for that event, that you're keeping those COIs with the contract or whatever event records that you're keeping. We don't keep them in risk management. It's not something that you can just come to risk management and say, hey, do you have a COI on file for so-and-so? Because sometimes we do with bartenders because they've just been sent to us, but as a regular course of business, we do not collect, categorize. We have no centralized mechanism for maintaining COIs. So it is important that they're collected for the events and then they're maintained with the contract records. If you find that you're using the same vendor for maybe 2 events within a couple months, and you've looked at their certificate of insurance and you've verified that they meet the requirements, and you looked at the term of the insurance, which we'll go through in just a bit, and they're still covered because you just used them, you don't need to go get another one. You can use what you have as the evidence, but you should keep it on file so that you can go back to it if necessary, or it will help us if we have to go back to it. Okay, questions on any of that before we move forward? Okay, so let's talk about what the actual standard requirements are for ASU. And when we're talking about events, the three that are the three that are most prevalent are the general liability. It's called commercial general liability coverage, and that will take care of any kinds of personal or property damage, bodily injury, anything like that. Auto is required if, again, that the vendor is going to be driving onto campus. And I literally mean like driving onto campus. If a caterer is coming to our campus, they're driving to the parking lot, they're unloading their stuff, and they're serving their food, they don't have to have auto coverage necessarily. I mean, they could hit somebody in the parking lot, I suppose, but we're more concerned about damaging or hurting people on the campus, property damage, that type of thing. So unless it's specifically for ASU business that they're providing services, or they're literally coming onto the malls, they wouldn't necessarily have to have the auto insurance. And then workers' compensation, that's a statutory requirement. So if they are doing business in Arizona, presumably that's who we're working with. Even if they're doing business elsewhere, they have to have workers' comp. If we're dealing with a very small company that might be an LLC or a sole proprietor, they have to demonstrate that they're exempt from that workers' comp, and they can do that. There's means in the language that they can fill out a form and say that they are not exempt, or they are exempt from that requirement because they do not have employees. But if you have employees in Arizona, even just one, then you can be subject to the workers' comp requirements. Additional coverages, and we talked a little bit about these. These would be for sexual abuse and molestation coverage would be a requirement if we have an event that's involving minors that are our responsibility. So they're not accompanied by their parents, or they're not on a field trip here with their teachers, their K-12 teachers, and we are considered to be in the care, custody, and control of them, then that vendor or that vendor is, then they would have to carry that particular coverage. And then liquor liability, again, if we're serving alcohol at an event, we want to make sure that the bartender or the caterer who's doing that is properly insured. So the specific limits for these particular things are listed here. And these are the limits that you're going to be looking for when you compare the COI that the vendor presents to our actual requirements. And so in this commercial general liability, again, this is for bodily injury, personal injury, and property damage. The limit is $1 million. And the general aggregate, which just means how much we could claim in total, would be $2 million. And while that number sounds really large, it is a standard amount of insurance. And as a business owner, it would not be unusual at all to have $1 million worth of coverage. In fact, if it were lower, it would be kind of surprising. Now, I've noted there at the bottom of the slide, the additional insured and waiver of subrogation apply to this particular coverage. And we'll talk a little bit about what that means, because that's something else to verify on the COI, on the certificate of insurance. The next one is the auto liability. And again, this is if the supplier will be driving on campus or on ASU business, this would apply. If they're not, they don't have to have it. And it's pretty clear in the terms and conditions of the purchase order and the ASU standard contracts when it applies and when it doesn't. So if the vendor says, well, it doesn't apply to me, then and that makes reasonable sense, then it doesn't apply. If that changes and their services become different, or the event becomes such that they do have to drive on campus, then it would kick in and apply, and they would be responsible for that. So leaving it in the contract as qualified is what we prefer to do. If the vendor is an individual, they have to have $100,000. If it's not an individual, if it's a company, it's $1 million. And again, these might look large, but they're not large limits. And if we looked at our individual policies as far as coverage, we would see probably these requirements, if not the $1 million. And again, for this particular coverage, the additional insured and waiver of subrogation apply. And then the workers' comp, we talked a little bit about that. It's the applicable statutory limits. And if it doesn't apply to the contractor or the vendor, then they can submit a sole proprietor waiver form. And that form just basically says, this doesn't apply to me because I don't have any employees, because I'm a sole proprietor, whatever other justification that they have. That form does need to be completed. It can be sent to risk management. It doesn't have to necessarily be completely signed off on before the event, but it does need to be submitted. And why I say that is because when we get the form, we have to submit it to state risk, and they will look at it and they will sign off on it as well. All that can take a little time, so the sooner the better. But if you don't have that signed, if you don't have that form signed from us in hand before the event, that's okay, but we do need to have it from the vendor who's providing the services prior to them providing any services. And in this case, the waiver of subrogation applies. So let's talk about what those mean. So when we ask a vendor to include ASU and the state of Arizona as additional insured, what that means is they can just go to their insurance provider and they can ask for that additional insured. If they're using TULIP coverage, which is short-term event coverage, they can ask for that additional insured. It's a nominal cost. It will cost them something, but I don't think it's unreasonable. And it basically provides coverage to somebody other than the policyholder. So in the event of a claim, ASU could say, hey, we are additional insured. We would like to pursue this claim. We could work with the vendor and the insurance company, and the insurance company kind of knows who we are, I guess is the best way to think about it, because we are listed as additional insured. We're not just one of many in line for claims against a vendor. And then the insurer has what's referred to as a duty to defend. So a lot of times in our contracts, if you're using our PO terms and conditions, or you see our standard terms and conditions, ASU asks for a vendor to indemnify us. So basically, we're just asking them that if you cause a problem at ASU, it's your fault. We want you to make us whole. If we've lost $10,000 due to property damage, we want you to take care of that. If we've lost $100,000 due to student suing us because of a personal injury, we want you to take care of that if it was your responsibility. And that's where that insurance comes in, right? The insurance coverage says, okay, well, I have that $10,000 and I have that $100,000, and ASU is added as additional insured. And it's a much easier process than if we have to go and sue them. We can do that, but this makes it much easier. Now, when we have additional insured requirements, and you'll see in our standard language, there's a whole long list. It says ASU, the state of Arizona, ABOR. And the reason that is because, again, state of Arizona is our insurer. And so it's going to be them ultimately who seeks the remedy from the insurance company. So it's not just ASU. We are protecting the Board of Regents, and we're protecting the state of Arizona as well. Now, when we are, well, I'll touch on the bottom note before we leave this slide. Let's talk about waiver of subrogation. It sounds like a complicated situation, but it's really not too bad. What that allows is it allows for an insurer, say the state of Arizona, say a student is injured or experiences some kind of damage, and they file a claim against ASU, and ASU determines, well, you know what, it was one of our vendors who actually caused the issue. Rather than saying, okay, student, go pursue that with the vendor, we don't want to do that. We're going to take care of the student, right? But the state will then pursue the difference, or not the difference, but the reimbursement or the damage claim. They will pursue that from the insurance company of that vendor. So that is called subrogation. We want to make sure that we can do that, but we do not want the other insurance company to do that. So if ASU files a claim against an insurer and the insurer pays, the insurer is done. They're not going to then go to the state of Arizona and say, hey, state of Arizona, you are partially responsible for this. You should pay this. So that's what the waiver of subrogation is there for. So we cannot allow for somebody's insurance provider to seek recovery from state risk, because we're not state risk. So if we were our own insurer, it might be a little bit different story. We might have a little bit more leverage, but we don't want to allow for that subrogation opportunity when we're dealing with the third party's insurance provider. Now, when ASU is asked to provide insurance, so back to the example of us using a conference center or some space for an event that is offsite, and we're paying for the venue space, that venue, whether it be the convention center or a hotel or a restaurant, if we're holding an event at a restaurant, they may very well ask ASU for insurance coverage or to show some evidence of insurance coverage. And we can do that. We don't usually get into the details of, well, we have this limit or that limit. We just provide a generic statement that we do have insurance, and that insurance comes from the state. And I would say that 95% of the time that is just fine with the other party. But we cannot add anybody as an additional insured, and we cannot allow for a waiver of subrogation. So remember, state risk is our insurer, and they don't want ASU to go around adding people to their insurance, such as a hotel downtown Phoenix or the convention center or someplace in LA that we're using, for an event. They don't want to have all of that responsibility and liability for others who are added as additional insured. So if you see that in a contract, just know that we cannot do that. In order to do that, we'd have to have good reason, and we'd have to have the permission of state risk. So that requires an exception request, and that requires a lot more time than if we simply explain to the vendor or the venue that we cannot add them to our insurance. And as I explained before with the waiver of subrogation, we don't want to waive that right because we don't have the authority to waive that right of seeking recovery. We cannot limit the liability, or we cannot limit the opportunities for state risk to recover loss from the state or for the state. So any questions on that? That additional insured and waiver of subrogation, it sounds really complicated. We'll show you how to look for it on a certificate of insurance. It's not an ASU specific thing. It's not a bureaucratic, political subdivision state entity thing. It's not an uncommon practice. And so it should not be something that's foreign to a vendor. And if it is, they can certainly talk to their insurance provider and discuss it with them and have that explained if they have any questions. And again, these things may cause a slight increase in their coverage, but it should not be anything that is significant. Okay, questions? All right. Here we are reviewing the certificates of insurance. So be excited about these accord forms. They look like this, and they look like, I don't know, I think they're very voluminous. I'm a bullet point kind of person, so this kind of overwhelms me when I first look at it, but it's not as bad as it seems. So if you look at the numbers that are highlighted on here, it's because you can find this example on our website. And then in addition, on our website, we kind of go through the explanations that I'll share with you for each of those numbered sections. So those are the areas that you'll become familiar with as you read more of them. And I would say as you read more of them, it becomes much easier and more, certainly more intuitive as to what you're actually looking for and what, and where the important parts are on this certificate. So that's what those numbers are for, excuse me. And again, this example and an explanation can be found on our website. So when we look at that first section, number one, the producer, that's just who's providing the certificate of insurance. If the vendor works with a broker, it could be the insurance broker's name. If the insurance provider works directly with the insurance company, for example, if I were going to produce this for my own auto insurance, then the producer could be Progressive Insurance. And then over to the right of that, it just talks about who to contact for that particular producer. So in the event there was a claim, risk management could reach out to that particular individual and say, hey, this is the vendor we've been working with. This is the claim that we have, and here's the contract, or in the absence of a contract, here's the COI, the certificate of insurance that we have, and please help us. So that just kind of expedites that claim process. Section number 2 is insured, and it's very important that that vendor name be the vendor you're working with. So sometimes companies have parent companies. Sometimes they have doing business as companies. If you have a contract, it should match your contract name. If you don't have a contract, but you have an invoice that you're paying, or you have a quote that you're going to use your P card to pay, the vendor name on that quote or that invoice should match the name here on this insured. And if it doesn't, you should ask the vendor why it doesn't. If they have a parent company, and that parent company's name is listed there, that's okay. But somewhere on this certificate of insurance, it needs to tie to the vendor that we're actually working with. And so that can be done, and I'll show you later in the description section below. Number 3, this just shows basically the insurance companies that are providing insurance. Sometimes that's the same as that producer in number 1. Sometimes it's different. Sometimes there's just one insurance company, and sometimes there's many. Third parties often, or just entities in general, often go to a different provider for workman's comp than they do for their general liability or their auto insurance. So there could be one listed insurance company there, or it could be many. It doesn't matter how many it takes to cover the requirements. It just matters that there are some insurance companies listed there and that they sound like insurance companies, unlike cat insurance company. Okay, the next section of the certificate, number 4 is somewhere up there. It's just basically outlining that text there that says this is to certify that the policies have been issued. But number 5 is really where we start to look at the certificate of insurance and compare it to that contract that we have. So remember, you're going to go back to those insurance requirements that I showed you previously that are on the PO in our standard contracts. And if you don't have that PO, you're going to use these for your P card. It's still the standard requirements that apply. So that's what you're comparing against. And when you compare our requirements against the vendor's requirements, this is basically what it should look like. Now the orange highlight with the liquor liability, that doesn't apply on every instance, as we've talked about. It's only needed if the vendor is handling or serving alcohol. So that additional $2 million should be listed there in that general liability section. So when we look from left to right, that insurer letter is A, and that corresponds to that list of insurance companies that were listed above. So I don't remember who was A. I think it was Apple Insurance. You know that Apple Insurance provides their general liability, and Apple Insurance provides their automobile liability, but then they have other insurance companies that provide the rest of the coverage that's listed, the umbrella, the workers' comp, and liquor liability. When we look at the additional insured and waiver of subrogation, those are those narrow columns to the right of that box, and they have X's in them. That shows that they have included additional insured in their insurance, and they have included the waiver of subrogation. So those boxes may have a Y for yes, or they might have an X for yes, they exist, or they could be blank. And there's another way, which we'll talk about as we move down, to address the additional insured and waiver of subrogation. But for the most part, those boxes should have something in there indicating that, yes, these two things apply to this policy for this particular certificate holder, which is ASU. It'll then share the policy number, which we're not too concerned about, but the policy effective date and the policy expiration date, those dates need to fall within your event dates. So if our event is now, this is expired insurance. It expired in April of 23. If you're looking, whatever your date of your event is, it needs to fall within the effective date of that policy. If for some reason you've collected the COI a couple of weeks before your event and it's going to expire before your event, then you need to just follow up with the vendor and ask them to make sure you get a new certificate as soon as it, to make sure that it does renew appropriately. And then those limits over in the right, those correspond with our requirements. So remember that each occurrence was $1 million, that general aggregate was $2 million. And then if they're leasing any space, they have to have the damages to rented premises, and that's a pretty common insurance, even if they're not leasing our space. And then $1 million for personal and advertising injury. So that should be what is on the insurance, on the certificate of insurance. If you're missing something, the best thing to do is to go back and ask the vendor. Say, hey, I don't think these match up with our limits, or you're missing the products and completed operations, $1 million. Can you fix that, or can you tell me why? And if there's some reason why they don't have it and can't get it, then please kind of reach out to risk management. We'll certainly help you with that. But if this doesn't match up with the requirements that we've asked, the first thing you should do is just go back to the vendor and say, hey, this doesn't look like it meets our requirements. Can you go back to your insurance company or provide some explanation as to why you're not meeting our requirements? And then we can go from there. We don't want you to spend a huge amount of time trying to analyze what they have and what things might be covered elsewhere. That's really up to the vendor to explain. The next section is the automobile liability. And so if you remember, we have $1 million limit, and this shows $1 million limit. The next section, umbrella, there may not be anything listed as an umbrella, but sometimes what vendors will do is if they don't have the $1 million of commercial general liability, maybe they only have 500,000, they will go get an umbrella, a policy, and that would be for an additional $500,000, which would add up to the $1 million that we require. You probably will not run into the umbrella coverage very often. If you do and have questions, again, reach out to the vendor. One thing I will say about umbrella coverage, for the events that we're doing and the coverages that we're mostly concerned with commercial liability and auto, umbrella coverage could be just fine, but it doesn't always provide any excess or umbrella additional insurance for all coverages. It will not increase workers' comp necessarily, for example. It will not necessarily address liquor liability if we need that. So we need to make sure that whatever gaps are trying to be filled with that umbrella coverage actually are filled, and that should be the vendor's responsibility to state that or demonstrate that. Workers' comp, again, we're going to just compare those limits to what our requirements are. And then in section D there, we have liquor liability. If it does apply, it's going to be $2 million aggregate and $1 million for each occurrence. And those particular limits, because they're not applicable to every event, those are listed on the risk management website. Okay, last part of the certificate of insurance. The description box, it's a pretty important box. And this is where the vendor is going to indicate their additional insured in their waiver of subrogation. And in the ASU contract language and in the standard requirements, it does, as I warned earlier, have a very long list of people that they need to include as additional insured, and people, entities, not people, entities that also are subject to the waiver of subrogation. And this in the description box is where they outline that. If they just had those boxes checked above, yes, we do have additional insured, and yes, we do have waiver of subrogation, that's great, but it really needs to be spelled out in this description box, because again, it's not just about ASU. It's not just about the certificate holder. It's about including the state of Arizona. It's about including the universities and ABOR. It's about all of those entities listed. So this is where they will list that. And when I say they, it's their insurance provider, and their insurance provider is very familiar with this form. So if you feel like you're spending a lot of time on this form, please don't. Please reach out to the vendor and ask them to take it up with their insurance provider so that they can share their contract requirements or insurance requirements that we've given them and make sure they give us a certificate of insurance that meets those requirements. The certificate holder, that's just whoever is going to be receiving the certificate. So that generally is ASU. That PO box that's listed there, that can be anybody's PO box. That can be your mail code, attached to your mail code. But ASU is the certificate holder. There's a little notice there in number 12 about cancellation, because we would like to know if there's any significant changes to the policy. And so that is subject to whatever the policy actually allows. And that basically states that. And then the last box labeled as number 13 should have a signature in it. It's sometimes looks like a generic signature. It looks like something that's been signed maybe 5 years ago and copied over and over again, but it does need to have a signature in that box to be complete. So any questions on reviewing those certificates of insurance? or why we do it. Okay. So we're here to help you. Okay, we're asking that you follow up with the vendors because you have the relationship. You're managing the event. You want to make sure that they're meeting all of your requirements in terms of services they're providing you, food they're providing you, whatever it is that they're providing you. And insurance is part of that, right? Insurance is part of that contract management, if you will, responsibility that comes along with that event planning. So we want you to know how to get that proof from the vendors, when to get that proof from the vendors. But if you have situations where the vendors are uncooperative or they have a lot of questions, then please reach out to us and we're happy to help you. If you have events where you think that there are some things that are just out of the ordinary, maybe you're having fireworks, or maybe you're having, I don't know, something else that would maybe raise the level of concern in terms of risk, reach out to us and see, is there something else that is needed for this particular event or for this particular contract and this provision of services. If you remember, we talked about insurance being required by the supplier. If you come into that situation and you're not sure how to handle it, or you're not sure what we can do, reach out to our website, and the next slide will give you that link specifically. But there's generic language there that you can refer the vendor to, that basically says that we are insured by the state. There's a master certificate of insurance that you can provide to them, and that is generally acceptable. It doesn't name them as a certificate holder necessarily, but it shows that ASU is insured, and it shows some limits for which we are insured, and that is generally all that they need. But remember, if ASU is being asked to include a venue or another party as an additional insured, we cannot do that. And we cannot include a waiver of subrogation. And probably one of the most important things is we cannot offer broad indemnification. So while as I mentioned, our contracts always ask the vendor to indemnify us, such that if there is a claim against them, that we will be made whole, we cannot offer that to them. ASU will be responsible for whatever ASU is responsible for, but because we are insured by state risk, and state risk monitors the risk of all of its entities that they insure, we cannot indemnify a vendor to the same extent that a vendor is asked to indemnify us. So sometimes what happens is we'll see a department that goes and plans an event, and oftentimes it's offsite at a hotel or some kind of convention center or a conference center, and the contract gets signed, and then they need to have a certificate of insurance. So they come to risk management and they say, I need to get a certificate of insurance for this particular contract because the hotel, the venue, they're requiring one. And so in order to give you a certificate of insurance, unless you just use that master generic one that's on our website, in order for us to give you a certificate of insurance that lists the hotel as a certificate holder, we have to go to state risk to get that certificate of insurance produced. And when we go to state risk to ask them for that special COI, they want to see the contract that goes along with it. If there are requirements in that contract for ASU to name them as additional insured, or for ASU to include a waiver of subrogation, or for ASU to offer indemnification, state risk will not provide that certificate of insurance because we haven't reviewed that section. We haven't asked for permission to do any of those things. And so it's really important that you're looking at those things ahead of time and identifying those ahead of time, because I think the certificate of insurance is often one of the last things that happens with a contract, and you don't want to get that far in your contract process just to find out that you can't provide what we've agreed to provide and signed off on providing. So if you come across a situation where insurance is required by the supplier and you're not sure to handle it, how to handle it, or indemnification is required by a supplier and you're not sure how to handle it, please reach out to us. Procurement helps with procurement contracts. OGC can always help, but just know that, and we can help guide you in the right direction, but that's not something that we can typically sign off on. And then, of course, if you're having any issues with a vendor or third-party provider, and they want some kind of exception, or they want some kind of explanation, or they're providing you with some explanation on why they can't or won't do something that we're asking them to, and you need help, please reach out to us and we're happy to help you. And then this last slide, and of course, I'll pass on the presentation to Marissa so she can share it. This last slide is just some resources, and it directs you specifically to those websites that we've talked about. The ASU Food Safety and Health, you guys are all familiar with that because of the recent policy changes. And then the SunMart list, the vendors that procurement has already vetted via the RFP process, and those vendors you don't have to collect COIs from. And then there's our standard requirements listed on the insurance required by vendors page. And then there's some standard language in that master certificate of insurance that applies to ASU when insurance is applied, or when insurance is asked of us. So with that, I'm going to stop my sharing and just ask for any final questions, comments, concerns.
Actually, Jackie, I have a question I'm sure a couple of other coordinators are also having on their mind. So for the vendors that we have to use, so the RFPs for like, if they're on SunMart, Bright, Event Rents, Pro-Am, do they already have certificates of insurance on file because that's how they would be able to work with the university? Do you know that by any chance?
Yeah, procurement is responsible for verifying when they award those contracts that the insurance is in place. And then as they renew those contracts, they ask for new COIs to just validate that it's still in place, but they will keep that with their contract files and procurement. Okay. So if you want to see it, you can ask procurement for it, but they are the ones that are responsible for those RFP related agreements and collecting the COIs.
Okay.
Yeah.
Cool. Alrighty. I'm not seeing questions in our chat or our Q&A. Yes, Jackie, if you could please share that presentation with us, that'd be great. I'll go ahead and post it to the MECA along with the recording. Okay. And everybody, just thank you for joining, and we'll see you at the next meeting.
Okay. Jackie. Yeah, thank you. Thanks for your attention. I appreciate it. Bye.